Matt Bucklin, founder of ExchangiFi. What exactly is a 351 exchange and how does it impact portfolio diversification and tax deferrals?
Hi, Chris. Thanks for having me. I appreciate the opportunity. And I'm really happy to talk about the 351 exchange. It is an interesting topic with a lot of interest. And I think it's really big for investors and the ETF industry. So it's the 351 exchange is a like-kind exchange, like other like-kind exchanges in the tax code. It's a provision where you can change your assets, your investments, and not have to pay any taxes until you sell the final asset. So everybody knows the 1031 exchange in real estate, where you can swap one real estate investment for another one, and your capital gains basis rolls into the next property. There's a 1035 and a 721, which is partnerships. The 351 was a way to take assets and put them into a new business and get issued stock in that business without having to pay capital gains taxes on the assets that were contributed to the new company. So the way it applies to ETFs is that there was an update to the ETF rule in 2019, which allowed for a portfolio of stocks and other markets, liquid markets, marketable securities to get contributed to a new ETF, and for the investor who contributes that portfolio to get issued shares in the ETF, tax deferred. So the cost basis stays the same. It's another like kind exchange. And so that's the mechanism. It's was done a few times. It's been tested, and now it's in the last year and a half or so. I'd say there's a lot of growing interest from the investor and advisor community. A lot because the market has done so well, and a lot of people are sitting on highly appreciated stocks that they might want to sell and not pay massive capital gains taxes on, but also just growing awareness and interest and the ecosystem around it growing and supporting this tax-free exchange.
Now, can you tell us more about ExchangiFi and its full range of services?
Sure. So, ExchangeFi is a platform I put together to help connect investors with advisors and with ETF issuers who are offering this 351 exchange opportunity with a ETF launch that they're planning. The the part that I've been working on is to educate investors and advisors on the 351 exchange and provide some software to help facilitate it and for them to really sell their clients on the providing this service for them. Um, right now, ETF issuers contact me. They say they're listing an ETF. They want to open it up to 351 exchange assets, list it, and investors and advisors are on the platform looking for deals and opportunities and looking to see if the strategy of the ETF matches their investment philosophy. And I will connect them, send out meeting links, webinars so they can learn about it and connect. And then there's some software on there that will help maximize capital gains tax deferral of a portfolio while also making sure that it's compliant with some of the rules around 351 exchange. There's some minimal diversification requirements. And that's really it. There's a lot that I can do with it. I'm helping ETF issuers make sure that they are also compliant, facilitating the exchanges and formatting things in certain ways so that the securities transfers go smoothly, and we have record base of the tax lot information. And so really a win-win-win for investors, advisors, and ETF issuers. So no-brainer for ETF issuers, raised with seed assets. They're already making fees and covering costs and get better distribution because there are more assets in the fund. The advisors, they get to provide a non-commoditized service to their clients, and they get to often just move assets from the brokerage side where they're sitting in these stagnant brokerage accounts, these old legacy positions, and and then move it to the advised side after they do the 351 exchange and earn more fees on it. And then the investors get tax deferred diversification, which is a win for them as well. The the concentration risk is really what this is solving for. It's the kind of the number one avoidable portfolio risk that in advisors try to help their clients avoid. But you know, if you need to diversify, is often a capital gains tax bill associated with it. So if you're trading in and out of positions in a taxable account, and some of the real good use cases for the 351 exchange is tax deferred rebalancing. So if you've had a run up in one of your sectors or positions that's gotten to be too large, and you've got this concentration risk in your portfolio, you can diversify part or all of that away into an ETF, which is really just a better structure for investors to hold their capital in. It's not just for the super rich. A lot of people are doing this with employee stock purchase units. They worked for one company their whole life and they participated in buying that company's stock, and now they've got a really oversized position in their portfolio of one company, so they're able to diversify that tax free. If there's a forced capital gains event, such as a buyout or an ETF that was purchased is being closed, if the company's going private, you're going to get cash. You have to pay capital gains on that. You weren't intending to ever sell it. You can avoid it by doing a 351 exchange in advance. Or if an ETF is getting liquidated and you're going to be forced to pay capital gains when the cash hits your account, then you can do a 351 exchange of your ETF into a new one. And a lot of higher net worth individuals have been tax loss harvesting and end up with these really concentrated portfolios after decades of just selling the losers and keep hanging on to the winners. And so they're able to take that and re-index it into a broad market ETF. And the way I think about it is it really just makes the tax code fairer for the individuals. There's a lot of real estate investors. It's the biggest asset class, and they are allowed to continue to compound at this higher rate without having to pay taxes. And that hasn't been true for equity investors. That's really the main benefit, besides avoiding concentration risk, is continued compounding in your life at a higher rate. And it just is fairer between different asset class investors. So that's how I think about it.
Very interesting. And how did you get into this space, the 351 exchange space, and come to have the idea to start ExchangeFi?
Well, it's a fun story. I went to the Yale School of Management and I took this class with Roger Ibbotson, and he's a famous investor. Everybody knows him. He's hoping to win a Nobel Prize. We looked at Yale's endowment and ways of replicating this in a liquid fund. There's lots of liquid alternative strategies in ETFs now, a lot of hedge fund strategies and things. And I thought it was an interesting project. Roger thought it was a terrible idea. I thought this is very sellable as an entrepreneur. And it just was a nagging idea. With all the active ETFs popping up in 2022, I thought, geez, this would be a neat ETF, a multi-asset ETF with lots of liquid alternatives in it. And wouldn't it be kind of cool if it looked like Yale's endowment and it traded under the ticker symbol Yale? So I called NASDAQ to see if this ticker was available, and it was, shockingly. So I reserved it and set about trying to launch an endowment style ETF. Along the way, I found a family office with about a billion dollars that had been tax loss harvesting for a couple of decades, and they were interested in doing a 351 exchange to a multi-asset ETF like this. And I thought maybe there's some other family offices and investors that would be interested in doing a 351 exchange as well. So I put up the website, 351exchange.com, with a sign up form. And I nailed the SEO or something. I got lucky because the website just got a ton of traffic and signups, both from the investor side and from the ETF issuer side. And I realized this is a perfect opportunity for a platform to connect both parties. And I switched my focus to that because launching an ETF it's getting easier, but it's still difficult. And I thought this was a better opportunity to help facilitate this. So that's when I left 351 Exchange and 351 conversion up for SEO and driving traffic to ExchangeFi, where I built the software and the web app and the rest of the platform.
Matt, I learned a lot. I think a lot of people will as well. Thank you for your time.
Thank you for having me, Chris.